Welcome to Electrified. It's your host, Dylan Loomis. Yes, you're about to hear Cathie Wood disagree with Elon Musk.
So the GameStop and the let's get the hedge funds. One of the interesting things about this is they're actually aiding and abetting, and I don't think you've heard this anywhere else. They're aiding and abetting the bond bubble. What is happening? What is happening? These companies that are left for dead by innovation, by the way, are selling, some of their bonds are selling at 25 cents on the dollar. They're dead as doornails in many, even bond investors' eyes. Once you drop below 75 on a bond, 75 cents to the dollar, the risk of bankruptcy looms large. So now some of these companies are refinancing. They're actually accessing the equity markets. They're not refinancing their debt. They're right now, they will. They're accessing the equity markets, and their bond prices are skyrocketing. They're tripling. I think it was AMC. Their bond price has just gone from 25 cents to 75 cents. Now, if you ask me, a student of innovation, maybe there's a shot of survival here, and maybe more so now that they've been able to do an equity offering, which they could not have done 2 weeks ago. Maybe, but I would not be putting my money there. I want to be on the right side of change. That's what ARK is all about. Do I like a two-sided market? I disagree. I agree with Elon Musk on almost everything, certainly in terms of technology. But on this point that short sellers are a negative for the market, and ARK, who were terrorized during Tesla's plunge during 2019, if you have the courage of your conviction, and our courage comes from research, back then, what did we do during that plunge when many speculators were saying they're going to run out of money? Our simple question was, how can that be? The markets have not shut down. And sure enough, they did an offering. Was it at a lower price than many of us would have liked? Sure, but it was small compared to the ones they've done recently. We bought all the way down. It was a gift for us to have those short raids.
A big point I want to make here is that so many people have said naked short selling caused this whole GME situation, but that's not necessarily true. Naked short selling is illegal, so I'm not going to explain it in detail here, but I think it's important we understand that over 100% of shares can be shorted without naked short selling. The float is simply the number of shares that are available to be traded on the stock market. This can differ from the number of shares outstanding, which might be held by corporate insiders or others, and are thus not available, generally speaking, for trading on the open market. The short interest is the number of shares that have been sold short. So if the percent of shares shorted is over 100%, that means there were more shares shorted than there were shares available to trade in the open market at that point in time. And this is key to the major squeeze endgame theory held by the Wall Street Bets members. They believe that due to the constraint of the number of shares available, that if people who buy and hold can just buy up the majority or as much as possible of the float, then people who are short will have no other option but to buy from them at basically whatever price they name in order to close out their short positions. But the float does not capture or represent the limitation on the short seller's ability to close their position. That's because it's not the float that represents the available number of shares that can be borrowed and sold short, but the shares outstanding that can be borrowed and sold short. Even though certain shares are essentially tied up in any given company, in most cases, those restrictions that prevent an owner from selling their stock at a moment's notice don't prevent them from lending out their stock so that it can be sold short. If and when these shares, which are not part of the float, are borrowed and sold short, it will increase the short interest without increasing the size of the float. That's why the short interest as a percentage of the float can exceed 100% without requiring the illegal practice of naked short selling.
People are saying, well, what's the research? Like, what are they doing this on, right? These companies, you want to be on, as you said, the right side of innovation. So has this exposed, some people think it's exposed a systemic risk to free markets, and others think it's the very definition of free markets.
Yes, well,
where does it fall?
Oh, yeah, no. Truth will win out here. And the truth is, history is not going to be on the side of those companies that didn't invest enough to move into the new world quickly enough, and probably are not going to be a big force moving forward. So one of the things that I did find interesting, I didn't know that a stock could be, or that 140% of the float of a stock could be short. That was a surprise to me. And so I think that hedge funds, or whomever is shorting, it's not just hedge funds, there are all kinds of investors shorting out there. It's going to be interesting to see if they will stay or if they will move to such what I believe was an outrageous position relative to the float out there. So kind of in a way, they might have seen this coming. And I do know that the one firm that got in trouble was I guess the Reddit folks were focused on the listed puts of the, now what's unfortunate about that is they probably don't know much about OTC puts, over-the-counter puts. Those are opaque. They can't see them. All this move will do is push all of that market over the counter, which is extremely profitable for banks, but it's more expensive for the end investors. So it's a little unfortunate. As an investor, I always like to hear the other side of the argument. And that's the other unfortunate thing that's going on here, I think. There are people now afraid to talk about why they're bearish on certain stocks. If during our Tesla 2019 experience, if we didn't have the cacophony of investors, sell side, buy side, retail, institutionals, putting down Tesla, we wouldn't have gotten the opportunities to buy it that we did. And we wouldn't have understood how much those investors did not understand what was going to move the stock. That helped us. And if their voices are shut down, I think that will be doing a disservice to all investors, because I want to know, what are the arguments against this position? Clearly, we're missing something. But we weren't when it came to Tesla.
And guys, the second point I really want to drive home with this video is to always hear the other side of the argument. Stay out of echo chambers. One of the best thought experiments you can do is to go through the process of forming an opposite opinion to what you hold. An example would be me, someone very bullish on Tesla, to take the time to try to form coherent, bearish arguments against Tesla to the best of my ability to understand the other side and see if there is any rationality there for myself. As Cathie said, the short sellers help us to craft those opposing arguments, and in addition can help depress prices so the longs can continue to accumulate shares. But I know this is a very controversial topic, so I would genuinely love to hear where you guys stand with this one. Please like the video if you did, subscribe for more Tesla content, and I look forward to seeing you in the next video. I hope that you have a great day.